Welcome students to EPG Pathshala. I am Dr. Kishan Kumar, Assistant Professor in Public Administration, JM PG College of Kent. Today we will discuss RBI at a glance. In this module, we will introduce the student to the discipline of public administration. The reading of the module will help in understanding RBI, its policy, and its functioning. We will start with introduction. The Reserve Bank of India is the nation's central bank. The institution started functioning on 1st April 1935 during the British period in accordance with the provision of the Reserve Bank of India Act 1934 and plays an important role in the formulation of development strategy of the government. It is also called the banker of banks or the lender of last resort. Since 1935, when it began its operations, it has stood at the center of India's financial system with a fundamental commitment to maintaining the nation's monetary and financial stability. From ensuring stability of interest and exchange rates to providing liquidity and an adequate supply of currency and credit for the real sector, from ensuring bank penetration and safety of depositors' funds to promoting and developing financial institutions and markets and maintaining the stability of the financial system through continued macro-financial surveillance. The Reserve Bank of India plays a crucial role in economy. Other banking institutions directly and indirectly associated with RBI are: number one, commercial bank collects saving primarily in the form of deposits and traditionally finance working capital requirements. However, in tune with emerging trends, banks have entered into term lending business. Cooperative bank is a financial entity which belongs to its members, who are at the same time the owner and customer of their bank. Cooperative banks are often created by persons belonging to the same local or professional community or sharing a common interest. Cooperative banks generally provide the member with a wide range of banking and financial services. Cooperative banks differ from stakeholder banks by their organization, their goal, their values, and their governance. In most countries, they are supervised and controlled by banking authorities and have to respect prudential banking regulations, which put them at a level playing field with stockholder banks. Depending on countries, the control and supervision can be implemented directly by state entities or delegated to a cooperative federation or central body. Cooperative banks in India finance rural areas under farming, cattle, milk, and personal finance. Cooperative banks in India finance urban area under self-employment industries, small-scale units, home finance, consumer finance, personal finance. Non-banking financial companies provide a variety of fund-based and non-fund-based services. Most of their funds are raised in the form of public deposits ranging from 1 year to 7 years of maturity. Depending on the nature and type of services, there are asset finance companies, housing finance companies, venture capital funds, merchant banking organization, etc. Structured organization and governance of RBI. Functions of Central Board. The Central Board has primary authority for the oversight of Reserve Bank. It delegates specific functions through its committees and subcommittees. The Reserve Bank is fully owned by the Government of India. The Central Board of Directors oversees Reserve Bank's business. Central Board of Directors by their members. Official Director, it includes one Governor, four Deputy Governor at a maximum. Non-official Directors, four Directors nominated by Central Government to represent each local board. 10 Directors nominated by Central Government with expertise in various segments of economy. One representative of Central Government. 6 meetings at a minimum each year. One meeting at a minimum each quarter. Central Board includes Governor, Deputy Governor and few Directors of relevant local boards. Committee of Central Board. It oversees the current business of the Central Bank and typically meets every week on Wednesday. The agenda focuses on current operations, including approval of the weekly statement of accounts relating to issue and banking departments. Board for Financial Supervision. It regulates and supervises commercial banks, non-banking financial companies, development financial institutions, urban cooperative banks, and primary dealers. Board for Payment and Settlement Systems. It regulates and supervises the payment and settlement systems. Subcommittee of the Central Board. Includes those on inspection and audit, staff and building. Focus of each subcommittee is on specific area of operation. Local boards in Chennai, Kolkata and Mumbai and New Delhi. These are 4 local boards representing the country's 4 regions. Local board members appointed by central government for 4-year terms represent regional and economic interest and the interest of cooperative and indigenous banks. Structure of RBI. There are 26 departments in RBI. These 26 departments focus on policy issues in Reserve Bank's functional area and internal operations. 28 regional offices and branches. The regional offices and their branches are the Reserve Bank's operational arms and customer interfaces, headed by regional directors. Smaller branches, sub-offices are headed by General Manager, Deputy General Manager. Training centers. The Reserve Bank Staff College at Chennai addresses the training needs of RBI officers and College of Agriculture Banking at Pune trains staff of cooperative and commercial banks, including regional rural banks. Zonal Training Center located at regional offices trains non-executive staff. Research institutes. RBI funded institutions conduct advanced training and research on banking issues, economic growth, banking technology such as National Institute of Bank Management at Pune, Indira Gandhi Institute of Development Research at Mumbai, and Institute for Development and Research in Banking Technology at Hyderabad. Subsidiaries. Fully owned subsidiaries include National Housing Bank, Deposit Insurance and Credit Guarantee Corporation, Bharati Reserve Bank, Note Mudra Private Limited. The Reserve Bank also has a majority stake in National Bank for Agriculture and Rural Development. Main activities of RBI. Monetary Authority, issuer of currency, banker and debt manager to government, banker to banks, regulator of the banking system, manager of loan exchange, maintaining financial stability, regulator and supervisor of payment and settlement systems, development roles. We will discuss this one by one. Assessing current and future challenges. Building on the firm foundation of our rich tradition, the Reserve Bank is also changing with times. The Reserve Bank mandate yesterday, today and tomorrow is to set a monetary and financial course that will sustain nation's economic growth and health during global downturns, periods of volatility, and global upturns alike. Our action prior to and during the present period of global financial upheaval exemplify these commitments. We have demonstrated willingness to take proactive measures to preserve gains and to ensure that progress is sustainable. The Reserve Bank responses during extraordinary times are aimed at maintaining financial stability, including maintaining sufficient rupee and foreign exchange liquidity to ensure that credit continues to flow to businesses and consumers and financial market remain stable. We also continue to address the challenge of ensuring that national financial and monetary policy making contribute to positive, sustainable and inclusive growth across income spectrum. Other financial institutions. Financial institutions give a physical presence to the system. They provide financial infrastructure. They encourage savings and make for optimal allocation. They make one type of contract with the borrowers and of another type with lenders. In other words, they perform the function of financial intermediation. Financial intermediation is a productive activity in which an institutional unit incurs liability on its account for the purpose of acquiring financial assets by engaging in financial transactions on the market. A brief account of main financial intermediaries in India is given below. The Ministry of Finance is at the top of hierarchy of financial institutions in India. It is an important ministry within Government of India. It concerns itself with taxation, financial legislation, financial institutions, capital markets, central and state finances, and the union budget. As of December 2010, Minister of Finance is Arun Jaitley. It comprises 5 departments, namely Department of Economic Affairs, Department of Expenditure, Department of Revenue, Department of Disinvestment and Financial Services. It controls various pension funds, provident funds, term lending institutions, for example IFCI, ICICI, IDBI, investment institutions, for example LIC, GIC, UTI, sectoral institutions, NABARD, NHB, EXIM, TFSI, and state level institutions, SFC, SIDC. Of these term lending and state level institutions are of no relevance in the present scenario. A brief overview of some of these institutions is given below. LIC, Life Insurance Corporation. LIC is the largest state-owned life insurance company in India and also the country's largest investor. It is fully owned by the Government of India. It was founded in 1956 with a merger of more than 200 insurance companies and provident societies. Headquartered in Mumbai, financial and commercial capital of India, the Life Insurance Corporation of India currently has 8 zonal offices and 101 divisional offices located in different parts of India. At least 2048 branches located in different cities and towns of India, along with satellite offices attached to about some 50 branches, and has a network of around 1.2 million agents for soliciting life insurance business from the public. UTI, Union Trust of India. The establishment of Union Trust of India in 1964 was the culmination of a long overdue need of the capital market in India and reflected the effort of government to popularize mutual funds to increase indirect holding of securities by the public. The objective of setting up UTI was to enable small investors to share in industrial prosperity. UTI introduced various unit schemes to suit different classes of investors. GIC, General Insurance Corporation. The entire general insurance business in India was nationalized by General Insurance Business Nationalization Act 1972. General Insurance Corporation of India was formed in pursuance of Section 9, Clause 1 of GIBNA. It was incorporated on 22nd November 1972 under the Companies Act 1956 as a private company limited by shares. GI was formed for the purpose of superintending, controlling and carrying on the business of general insurance. As soon as GIC was formed, Government of India transferred all the share it had of the general insurance companies to GIC. Simultaneously, the nationalized undertakings were transferred to Indian insurance companies. After a process of merger among Indian insurance companies, 4 companies were left as fully owned subsidiary company of GIC, which are number 1, National Insurance Company Limited, number 2, New India Assurance Company Limited, number 3, the Oriental Insurance Company Limited, and number 4, United India Insurance Company, EXIM. Export-Import Bank of India. Export-Import Bank of India is the premier export financial institution of the country, set up in 1982 under the Export-Import Bank of India Act 1981. The Government of India launched the institution with a mandate not just to enhance export from India, but to integrate the country's foreign trade and investment with the overall economic growth. Since its inception, Exim Bank of India has been both a catalyst and a key player in the promotion of close border trade and investment, commencing operations as a purveyor of export credit. Like other export credit agencies in the world, Exim Bank of India has, over the period, evolved into an institution that plays a major role in partnering Indian industries, particularly the small and medium enterprises, in their globalization efforts through a wide range of products and services offered at all stages of business cycle, starting from the import of technology and export product development to export production, export marketing, pre-shipment, post-shipment and overseas investment. TFSI, Tourism Finance Corporation of India Limited. The Government of India had, pursuant to the recommendation of National Committee on Tourism, which is UNIS Committee, set up under the aegis of Planning Commission, decided in 1988 to promote a separate All India financial institutions for providing financial assistance to tourism-related activities and projects. In accordance with the above decision, the IFCI Limited, along with other All India financial investment institutions and nationalized banks, promoted a public limited company under the name of Tourism Finance Corporation of India Limited to function as a specialized All India Development Financial Institution to cater to the financial needs of tourism industry. TFSI provides financial assistance to enterprises for setting up and development of tourism-related projects, facilities, and services such as hotels, restaurants, holiday resorts, amusement parks, multiplexes, entertainment centers, education and sports, safari parks, ropeways, cultural centers, and convention halls, etc. NABARD, National Bank for Agriculture and Rural Development. Against the backdrop of massive credit needs of rural development and the needs to uplift the weaker sections in rural area within a given time horizon, the National Bank for Agriculture and Rural Development was set up. The Reserve Bank had the responsibility to discharge in respect of its many basic functions of central banking in monetary and credit regulation and was not therefore in a position to devote undivided attention to the operational details of emerging complex credit programs. This paved the way for establishment of NABARD. The Parliament, through its Act 61 of 81, approved its setting up. It was set up with an initial capital of rupees 100 crore, which was enhanced to rupees 2000 crore, fully subscribed by the Government of India and RBI. NHB, National Housing Bank. National Housing Bank was set up on July 9, 1988 under the National Housing Bank Act 1987. It is wholly owned by Reserve Bank of India, which contributed the entire paid-up capital. The head office of NHB is at New Delhi. NHB has been established to promote sound, healthy, viable and cost-effective housing finance system to cater to all segments of population and to integrate the housing finance system with the overall financial system. SEBI, Securities and Exchange Board of India. The basic function of Securities and Exchange Board of India are to protect the interest of investors in securities and to promote the development of and to regulate the security market. It was established on April 12, 1992 in accordance with the provision of Securities and Exchange Board of India Act 1992. It exercises control over the stock exchange, stockbrokers, various investors in stock market, mutual funds, ETFs, etc. SEBI has enjoyed success as a regulator by pushing systemic reforms aggressively and successively. For example, the quick movement toward making the market electronic and paperless, rolling settlement on T+2 basis. SEBI has been active in setting up the regulation as required under the law. It has increased the extent and quantity of disclosure to be made by Indian corporate promoters. More recently, in the light of global meltdown, it liberalized the takeover code to facilitate investment by removing regulatory structures. In one such move, SEBI has increased the application limit for retail investors to rupees 2 lakh from 1 lakh at present. IRDA, Insurance Regulatory and Development Authority. The Insurance Regulatory and Development Authority is a national agency of the Government of India based in Hyderabad. It was formed by an Act of Indian Parliament known as IRDA Act 1999, which was amended in 2002 to incorporate some emerging requirements. The mission of IRDA, as stated in the Act, is, quote, to promote the interest of policyholders, to regulate, promote, and ensure orderly growth of insurance industry, and for the matter connected therewith or incidental thereto, unquote. It regulates and develops the insurance organizations. Recently, the Government of India ruled that unit-linked insurance plans will be governed by IRDA and not the market regulator, Securities and Exchange Board of India. Thanks.